Well, greetings to all my investment clients. My name is Walter Meziars, your wealth manager, CPA tax advisor. As always, need to read this disclosure. This video is not intended as investment advice or solicitation to buy or sell any securities. Please seek investment advice from your current advisor, or if you want to no cost, no obligation risk analysis of your current portfolio, please give me a call directly on my cell, 586-873-8156. I would encourage anyone who is not a client to stop the video and read this full disclosure. And if you want more information about Trinity Wealth Solutions and myself, Walter Meziars, please go to this website, brokercheck.finra.org. Alrighty, now that we got that out of the way, what I'm going to start doing is giving kind of a broad economic, political trend, especially economic news, which way it's trending, and then dwell into the stock market and kind of what we're doing with clients' portfolios. So let's get into kind of high level analysis, or just news, I would call it, as far as what's in the news, what's the economy doing. So bear with me. I had to start my presentation. So what I'm going to do every week is kind of give this economic and political news for this particular is for week ending February 20th, 2026. So kind of SCOTUS tariff ruling. Probably everybody's heard about Supreme Court ruling against tariffs. Market rallied to some degree. GDP was 1.4, and U.S. Trump strikes back as far as the tariffs that were struck down by the Supreme Court. Okay, sorry about to figure out how to move my slide down. So the big news last week, Supreme Court, and it happened Friday. Supreme Court strikes down Trump tariffs. It was a landmark decision, 6-3. So ruling was against the IEEPA tariffs. So the law at issue is International Emergency Economic Powers Act 1977, used by Trump to impose sweeping import duties on most countries. What the Supreme Court ruled is that this particular IEEPA contains no reference to tariffs or duties and cannot confer such sweeping unilateral tax authority on the president. Bottom line is, it's unconstitutional, if you want to say it in plain English. The major questions doctrine, court applied the doctrine. Congress must clearly authorize decisions of vast economic significance, which it did not do in IEEPA, which is the International Emergency Economic Powers Act. What's invalidated? Liberation Day, remember, where President Trump did reciprocal tariffs on fentanyl-related tariffs on Mexico, Canada, China, and other IEEPA-based duties are struck down. What remains, excuse me, unfortunately my cough is back. Section 232, National Security, and Section 301, Unfair Trade Tariffs, remained fully enforced. Total remaining tariffs burden $635 billion over 10 years. So big picture question is, obviously that was struck down. The question is, what's going to happen to all those tariff revenues that were collected? 175 billion plus. So here's the challenge, when will the government have to start paying back those tariffs that were paid by U.S. companies here as they were importing. So it's going to create some challenges. Time frame, who knows? This may take months to start doing the refunds. Okay. So, but Trump, being Trump, he strikes back. He issued new 10% global tariffs. And this is based on Section 122. It's going to last for 100. It can only last for 150 days. Beyond that, so until July 24th. Beyond that, Congress would have to approve those tariffs. So new effective rate on Chinese imports is 35%. So Trump reaction at the press conference. Obviously, he was not pleased, but he has to follow the law, what Supreme Court issued. There's a lot of uncertainty questions. What does it mean? The market liked what that Supreme Court struck down all these tariffs. Market initially in the morning was going down, as on the news, the market rebounded. So for the stock market short term, it was a positive. So enough about economic and political news. Stock market weekly recap. This is as of Friday, February 20th. So S&P 500 rose 1%, a week's gain. NASDAQ again snapped a losing streak. I'm sorry, was up 1%. Dow up, smaller gain, 0.5%. And the volatility VIX, which is a measurement how volatile the market is. Once you start approaching over 20 or 21, 22, that's kind of a indicator. Hey, expect more volatility in the stock market. I'm not going to go to top gainers, key losers. Don't want to go into that much specifics. In some economic data, week ending February 20th, 2026, GDP, fourth quarter, annual rate 1.4%, much lower than the consensus was expecting. So again, as I've talked about in previous videos, the economy is definitely slowing down. Full year 2025 GDP growth, 2.2, which is below. I mean, usually if the economy is heading in the right direction, we should be over 3%. So the trend is really down. So those are not good signs. And then CPI, Consumer Price Index, year over year 2.4, core CPI 2.5, lowest since 2021. So there is a disinflationary trend intact. Core PC, that's X energy, is 3%. That's the one that the Federal Reserve kind of monitors and looks at to decide whether they're going to do interest rate cuts. Trade deficit, 70.3 billion. We've always unfortunately had a huge trade deficit. And the Philly Fed Manufacturing Index crushed estimate 7.5, went to 16.3. Again, one month doesn't make a trend up. So kind of a mixed bag in everything. Political and policy developments. Obviously, tariffs were struck down. Refund liability, billion-dollar question. How is that going to be handled? The other things, I'm not going to go through a whole lot. I think the other big one is that the market is watching is the Federal Reserve Chairman Kevin Warsh nominated as next chair, and he's going to, I think, take over in May. The big one really is Iran tensions and geopolitical risk. Reports of stalled U.S. Iran nuclear talks and potential military action rattled energy markets. Mid-week oil prices spiked on geopolitical fears before stabilizing. Middle East risk remains an inflation wildcard for the Fed. So again, kind of big picture, lots of uncertainty, lots of things that can cause the market and the economy to start a trend downward. What to watch? Week of February 23rd, 27th, Monday, durable goods orders. Again, that's kind of economic indicator, how the economy is doing, factory orders. So those will be critical. Earnings, Keysight Tech, Diamondback Energy, Domino's. On Tuesday, consumer confidence. Again, broad economic indicators. Wednesday, no major economic news. Big earnings, Nvidia, Salesforce, Lowe's. So a lot of technology companies. Thursday is going to be a very important day. Initial jobless claims. And Friday, producer price index. Again, kind of monitoring inflation. So kind of a busy week, economic news, and we'll just have to see what comes out, and that could impact the stock market. Alrighty, so let's get into kind of the nitty-gritty of the stock market. What is the stock market been doing? And if we look at the charts that I always present, just a quick update. We did completely get out of the market on Friday. We had some gold position, as precious metals. We had about 40% exposure to precious metals, and we've done well. And then we had 15% in SPY. So everything's sitting in U.S. right now, cash, and I'll be deploying that into short-term U.S. Treasuries, short-term 1 to 3 month, very safe, guaranteed, earning around, depending, could be around 4%. But if we look at the 5-day, kind of what did gold did very well in the last 5 days. Everything else was kind of a mixed bag. 1 month, again, we had that almost a 20% drop in gold, which is very, very unusual. So let's just back out for 1 year. Our clients, we got into gold. It was December 3rd, I believe, 4th. So we had a nice run up. Unfortunately, there was a pullback, and here's where I sold. We're definitely in the money. We're doing much better than the stock market. We're about 5% better than the stock market short-term year-to-date. So if we look year-to-date, gold was up 18%. We're pretty much the markets were negative or flat territory. So we've, especially technology, SPY kind of breaking even. So we definitely, when I analyze clients' portfolios compared to the broad market, we're actually ahead of the game, about 5%. So question is, why did I get out of precious metals? There's just too much uncertainty right now. As the owner of the research company that we get pretty much twice a day, technical analysis, he's got a phenomenal analogy. He says, look, just imagine you're out at sea in your boat and you see a storm coming. I mean, what are you going to do? You're going to head for land and dock your boat and then wait till the storm passes and then eventually go back out to sea. That's kind of similar what we're doing with our clients' monies. Right now, there's definitely a storm brewing. We don't know which direction the market is going to go. So the best place to be right now just kind of sit on the sidelines. And we're still earning roughly about 4%, safe, guaranteed. If the market reverses and gold decides to, jump again, then if the trend is going to continue, as we see right here, we had a trend down, huge, and it's it was choppy, choppy, choppy. It's going up. We don't know if this is a new trend up or if it's going to go the other direction. We just have to wait and see. So, bottom line, clients are completely out of the stock market, sitting in guaranteed 1 to 3 U.S. Treasury bills, and we'll just have to wait and see. Wait for signals. If the trend reverses, then we can always get back into the market. And one last thing I just want to point out is bonds. Why do I talk about bonds? Somehow it doesn't want to show. Sorry. I guess I won't. Give me 1 second. I'm going to have to do a search for bonds to see what they've been doing. Bond interest. I'm doing this on the fly, so sorry. Bond yields. CNBC has these charts, so sometimes they don't want to come up on the weekends. I'm not sure if there's too many people on the internet, but it takes a while for them to pop up. Anyway, bonds are kind of still trending. We don't know which direction they're going to trend. I'm specifically talking about long duration bonds. 20 and 30-year bonds. They're treading water. We're just waiting. It's still too early to try to get into long duration bonds, TLT. We'll just have to wait which direction bonds are going. Sorry, I can't get the charts up. It's the weekend. Oh, there we go. Again, my apologies for rambling on, trying to get this up. But I'm looking at a 20-year bond, and the chart is not cooperating here. But pretty much it's up for the 20-year bond, current price 4.6%. There we go. So as we can see, there's really no trend in interest rates long duration. It was up, went down, went back up, down, it's going back up. So it's still no definite trend. We look at 5 years, we look at all. We want to see a trend like this before we get into long duration bonds. Right now, the trend since 2018 has been up and kind of trading sideways. So we have to wait to see which direction is going to grow. We want it to go down, and that's where we can actually get into long duration bonds and make a decent rate of return for our clients. So on that note, thank you so much for watching. Hopefully you had a great weekend. For those of my clients who still have not made a tax appointment with me, you can do so by going to my website, www.trinitywealth.net, and to the left on the banner says make an appointment, schedule an appointment with me. You click on that and it'll take you to my calendar. So again, thank you for watching. Stay tuned, and we will see you next week. Take care. Bye now.